In 2022, Kohl spent millions to keep outsiders out and accidentally locked itself in with them. Why would a company build a financial trap so elaborate that in the end, it couldn't escape itself? Kohl's poison pill wasn't just defensive, it was self-sabotage dressed up as strategy. And that's not even the weirdest part. The real question, what if the moves meant to save a business actually guarantee its downfall? That's the curiosity we'll chase, and the answer only reveals itself at the very end. First, picture America in 2022. Inflation, Amazon, and a retail landscape littered with casualties. Kohl's, once the darling of middle America, is suddenly the target of activist investors. These outsiders see a fat, undervalued company ripe for the picking. But inside, Kohl's board is sweating because the vultures aren't just circling, they're knocking. What most people miss, this wasn't just about money. It was about control. So, the board dusts off an old financial weapon, the poison pill. Here's where it gets strange. This poison pill is not a drug, but a legal booby trap. If any outsider buys too much stock, everyone else gets a flood of cheap shares. It's meant to make a hostile takeover impossibly expensive, like rigging a monopoly board so only you can win. But there's a hidden cost. The market smells desperation. Instead of boosting confidence, the poison pill triggers fear. Investors bail. Stock tanks. Ironically, the protection hurts the very shareholders it's supposed to defend. Most people assume poison pills are rare, desperate moves. But here's the twist. In the 80s, poison pills were everywhere. Today, they're back in style. The reason? Companies fear activist investors more than ever. But the weapon has a cost. It signals weakness. And when the sharks smell blood, things get ugly. Kohl's was already struggling, shrinking foot traffic, stale product lines, and e-commerce eating its lunch. But the poison pill distracted from real problems. Instead of fixing the store, the board played defense. Meanwhile, the world kept changing. Here's where it gets dangerous for your own money. If you invest in a company that's fighting itself, you're just buying into chaos. And chaos is expensive. Let's rewind. The poison pill was triggered by a real threat, a $64 a share takeover offer. The board said no. They called it undervalued. But the market disagreed. Within months, Kohl's stock slid to $30. Half its value, gone. Shareholders lost billions, ironically, thanks to the very pill meant to protect them. But here's the hidden twist. The poison pill didn't stop outsiders. It only bought time. And time in retail is a luxury you can't afford. While the board protected itself, Kohl's competitors adapted. Target and Walmart invested in e-commerce, logistics, and private label brands. Kohl's, it doubled down on loyalty programs and Amazon returns. Bandages, not cures. Most people don't see the irony. The poison pill protected the status quo, not the future. By the time the pill expired, so had the best chance to adapt. There's a deeper lesson hiding here if you look closely. When companies fear change more than failure, shareholders pay the price. And that's not just a Kohl's problem. It's everywhere, from tech to banking to your own wallet. Here's a counterintuitive truth. Sometimes the best protection is letting go. But let's get even more concrete. Kohl's spent over $30 million just on legal and advisory fees defending itself. That's money not spent fixing stores, improving tech, or lowering prices. Meanwhile, customers noticed. Foot traffic dropped. Loyalty programs couldn't fill the gap. The poison pill didn't just fail to stop outsiders. It scared away insiders too. But the biggest mistake, the board assumed time was on their side. Time is never on your side in retail. The world moves too fast. Here's what most investors miss. Defensive moves are expensive, but inaction costs even more. Kohl's spent years fighting change, and with every quarter, the cost grew. Meanwhile, the poison pill expired in 2023 and nothing happened. No dramatic takeover. No miracle turnaround. Just a company, weaker and more alone. The catch: now Kohl's is too weak to attract real bids, but too unstable to go it alone. Shareholders got the worst of both worlds. No buyout premium, no growth. So what's the takeaway beyond don't trust quick fixes? In finance, every defensive move has a hidden cost, and that cost compounds over time. If you're an investor, watch out for companies that spend more time defending turf than building it. If you're running a business, remember, protectionism can choke out adaptation. And if you're just a shopper, don't be surprised when loyalty programs can't fix a broken model. But the biggest irony, the poison pill that trapped outsiders ended up trapping the company too. That's the real lesson of Kohl's. In trying to save itself, it built a cage it couldn't unlock. So, next time you hear about a poison pill saving a company, ask, saving it from what exactly? And who really pays the price for protection that goes too far? If you want to see how another retail giant broke the cycle and what real adaptation looks like, check out our deep dive on how Target outsmarted Wall Street's worst predictions. But let's not let Kohl's off the hook just yet, because there's another layer to this boardroom drama. Most poison pills are temporary, but the scars can last for years. Investors don't just forget a board that chooses defense over growth. Even after the pill expired, activist funds like Macellum and Engine Capital kept poking at the board, demanding change. But the board, still reeling, doubled down on old strategies rather than inviting in fresh blood. That resistance to change, it's contagious. Senior managers start playing it safe too. No bold experiments, just more cautious steps. Here's where the real risk multiplies. If the culture turns defensive, even small bets on innovation are seen as threats. The result? A business allergic to surprise. Fatal in a world that rewards reinvention. Numbers don't lie. In 2022, Kohl's same-store sales dropped 7.7%, while Target's rose 2.7%. That's not just a blip, it's a warning siren. Meanwhile, customer reviews tanked. On major rating sites, scores slipped from 4.1 to 3.6 stars in a single year. Competitors like TJX and Ross snapped up market share, stealing the bargain hunter customer Kohl's once owned. One missed detail. Even Kohl's Amazon Returns partnership was a double-edged sword. Yes, it brought in foot traffic, but those customers rarely bought anything else, leaving with Amazon credits, not Kohl's goods. In effect, Kohl's paid for its own traffic jam, without any real sales to show for it. The irony: the more Kohl's tried to defend, the less it controlled. And when Wall Street smells a company losing control, short sellers line up for a feast. In 2022, short interest in Kohl's stock doubled, signaling the market's growing bet on failure. So, if defense is dangerous and offense is expensive, what's a retail giant supposed to do? Here's a twist. Some companies invite activists in, then use their ideas to spark a turnaround. Take Domino's Pizza. Once a punchline, now a Wall Street darling. Why? They let outsiders push for digital ordering and kitchen upgrades. Or look at Netflix. When threatened, they didn't build walls. They changed the game, pivoting from DVDs to streaming. The lesson: sometimes the best defense is a risky offense. Kohl's could have used that $30 million to reimagine store experiences, or trial new store formats like pop-ups and micro-fulfillment centers. Instead, it bought time, while the world bought elsewhere. Now, every investor presentation opens with a defensive posture. We're not for sale, but we're open to ideas. But the audience, Wall Street, has heard this tune before, and they don't like reruns. If you take one thing from Kohl's saga, let it be this: businesses that bunker down rarely emerge stronger. The world rewards companies that run toward the storm, not hide from it. Because in business, every wall built against outsiders has a door. Sometimes, the key is simply opening it. So next time you see a headline about a poison pill, remember, the real poison is fear of change. And the antidote? A little courage, a lot of adaptation, and leaders willing to unlock the cage.